Hello, everybody. I'm Andrew Copeland with Craft Beer Professionals.
And I'm Michael Varda with Craft Beer Advisory Services.
We are excited to share with you the results of our 2025 industry-wide workplace satisfaction report.
This is our fourth year now, believe it or not, of doing this annual report on the state of the craft beer industry workforce, how people are doing, how people are feeling. We're really excited to dive into this information with you today. Before we get into the information itself, we're going to talk a little bit about why we are doing this, why it matters. Number one, we want to have an annual touch point understanding how things are changing for workers in the craft beer industry, how people are thinking, how people are feeling, where are their opportunities, where can breweries do a better job, or where breweries are succeeding in making sure their employees feel valued and ultimately want to continue growing at their spot. Measuring quality of experience is a big part of that. If you're new to this presentation, you're going to see a lot of metrics talking about, I feel enabled, I feel trained, I feel comfortable with my coworkers. And lastly here, monitoring changes over time is where the magic comes in. Understanding that point in time in 2022, all the way back then to all the things that have happened in the industry leading up to now, how is the state of the industry? Can we pinpoint any of the changes in overall employee morale? Thinking about right now, it's a pretty tumultuous time, Andrew, in the industry. So thinking about how that might play a part in how employees are feeling over time. It's important to also understand how we do it. The original survey was developed in winter of 2021 when Andrew and I had several workshops understanding what is it that we want to track. That original survey that we had partner stakeholder meetings where we said, does this make sense to brewery owners, to other industry professionals? What is it that is missing? And once we finalized that survey, we have kept it the same since. And that in part is to make sure that we are tracking and understanding these things with integrity over time. And the 2025 wave fielded across Q1. It opened in January, early January of this year. And then we also had that, fielded through March of this year. And the national audience of craft beer professionals were the survey takers. The analysis completed March of this year. The demographics, want to have an understanding of who actually took the survey. So this year's respondent pool represented 131 breweries across 41 states with a total of 166 responses. So we do have some overlap of some folks at breweries, more than one employee working at a brewery taking the survey. You have a role breakdown of end size here, front of house, brewing ops, business, and owners across the board. 80% full-time, about 2/3 male, 1/3 female. 83% non-LGBT, 11% LGBT. And this is something that is actually an unfortunate shift in our response rate overall over time due to the lower number of responses and low percentage of LGBT responses. We will not be able to have those cutouts for the LGBT segment in this year's particular readout. If you're interested in how that has shifted over time, you can get the 2024 version of the study and be able to see those, but it is not statistically valid. We cannot report with integrity on the shifts and the opinions of LGBT workers at this time. So our first section that we have is tenure and compensation. And first up, we have tenure reporting. Before we get into the actual numbers, I'm going to talk a little bit about how these charts are organized, what these colors mean. So we focus more on the story and less about the numbers that'll be in front of your face. So thinking about all of the reds and the greens that you see, the red is going to represent where a minority of a population sits. So if we look at the brewing ops category in that top chart, 0% of brewing operations employees have less than 6 months tenure in our survey respondent base, whereas we see at the bottom of that, 28%, 4 to 6 years, 31%, 7+ years. That's where a majority of the population is sitting. So you can use these red and green markers to really understand where a majority of a population sits versus where a minority of that population sits for each metric. So tenure reporting. This year's reporting suggests attrition is significantly higher in front of house roles, and brewers are often most tenured individuals at the brewery, aside from owners. So looking at that first chart here, how long have you been employed at your brewery? For front of house staff, we see that 40% marker right in the middle. A plurality of front of house employees working 1 to 3 years. We do see, and that's less than 6 months and 6 to 12 months, combining that 10 and 20, about 1/3 of front of house staff has less than 1 year of experience. This really contrasts when we look at the rest of the board: brewing operations, business folks, and owners. Owners perhaps being less surprising. We would expect owners to have the most tenure, but even among business folks and brewing operations, we're seeing over 80% of those two categories saying that they have more than 1 year of experience at that brewery. So that tells us some things about where there are jobs and where there are not jobs in the industry. Brewing jobs are going to be tougher to come by. This is a trend. I'm looking at on the right side of the screen now. From 2023 to 2024, the number of brewers with less than 1 year experience dropped by over 25%, suggesting that entry-level brewing jobs were harder to find. And that trend continued in 2025 with an additional 25% decline in new brewers entering the field based on our respondent base. How long have you been in the current role? It's the bottom chart right there. So this is a little bit different from how long have you been employed at your brewery. How long have you been in your current role is meant to capture growth within the space. Growth within, okay, I started a new role within brewing or started a new role. Maybe I'm taproom manager now in front of house. Maybe I got a promotion being a marketing assistant to marketing manager. That is what this bottom chart is tracking here. And we see, again, similar trends of folks being in role much more often in the brewing ops and business and ownership as opposed to the front of house. Up next, we have compensation packages. This chart is looking at self-reported benefits and elements of compensation packages year over year from 2022 to 2025. So looking for right now, we're going to compare 2024 and 2025 primarily. Employees are reporting less PTO and health insurance options than previous years. However, mental health benefits doubled from 2024. So when we look at that, health insurance being the fourth line down, 36, 39, 43, back down to 37% in 2025. So effectively, no shift from 2022, despite an increase from 2022 to 2024. Paid time off is another element here that we saw decrease from 2024 to 2025, 64% down to 57%. Then at the very bottom, we see that mental health stipends shoot up from 5% to 11% overall. And this is a bit of dissonance between these two, where there's less PTO, fewer health insurance options, according to our respondent sample, but more of a mental health resource support in the form of a stipend. So thinking about opportunities, if you're looking at this as a brewery owner, as someone in charge of benefits, making sure that you have that paid time off and health insurance if you can. These are going to be high leverage opportunities that we're going to see later on in a section that Andrew is going to cover himself. But making sure that your employees are feeling supported when they are outside of work, making sure that that is something that we don't lose track of despite the challenging landscape. Now we get into self-reported total annual compensation. As a parameter, this is inclusive of both salary, tips, all compensation bucketed in dollar form. Front of house income disparities indicate that more breweries are likely leaning on part-time staff than previous years, and that also signals some of the potential retention issues that we're going to cover throughout this presentation. We see lower income for front of house as opposed to business. operations, business folks, that being marketing, breakdowns of role groupings being on the right side, sales, marketing, accounting, finance, HR, distribution, legal. These are all bucketed into that business segment. And we see, particularly when we look at the $60,000 and up, about over half of those business folks are making $60,000 or above. When we compare that to front of house and brewing operations, it's a significantly less percentage reaching that $60,000 or greater threshold. Again, part of this, at least on the front of house, is the part-time labor. However, when we think about overall attrition and retention with front of house workers, the more that you can offer front of house workers in incentives to perform well, these are going to be keys to ultimately having less attrition, less turnover in these particular roles. At the end of the day, money talks, and I'm not going to steal any more of Andrew's thunder for a later portion of the presentation about compensation. But one thing here also to look is owners. Approximately over 50% of owners are reporting between $20,000 and $60,000. So at least some level where there are often employees that might be taking home more money than the owners themselves. And also, not to be discounted, the nearly 20% of owners bringing home $20,000 or less annually. Now we're looking into perceptions of how you feel about your pay. So we talked about how front of house folks, they are being paid a little bit less, in part perhaps because of some part-time roles, and business folks being approximately 50% to 60% of those folks bringing home over $60,000 a year. How do you feel about it? Front of house workers, we're going to pay attention to the 2025 margin here. 33% of front of house workers feel they are being paid below fair pay. 1 in 3 of workers in your tap room right now, front of house, feel they are not being compensated fairly. When we look at business folks, the number actually doesn't shift that much. The pay changes from the last slide of business folks often being paid $60,000 more, but the actual feelings and perceptions remain relatively the same. Half of people think they're receiving fair pay, but about 1 in 3 still feel they are being paid below fair pay. When we look at brewing and owners, generally we see this below fair pay increase even more. So looking at 2025 for brewing operations, 49% of brewers feel they're being paid below fair pay. Owners, 55% of owners believe that they are also bringing home below fair pay. And this is a big statement that we're thinking about here overall. The best case scenario, front of house and business workers, 1 in 3 of those folks are still citing that they feel they're below fair pay. When we look at brewing operations and owners, it goes up to 1 in 2. Half of those individuals feel that they are going to bring home below fair pay in this year's annual compensation. When we think about what that means, and I know that it's a very difficult time, and with rising costs and tariff uncertainties, these folks are really feeling this at largely increased levels, particularly brewing ops from 2023 to 2025, nearly a 10 percentage point increase. And then for owners, actually over that 10 percentage point increase dating back from 2022 to present. All to say, the market factors, the actual take-home pay, these factors are starting to compound, and they are ultimately going to play a part in the metrics that Andrew is about to start to talk about now with sense of belonging.
Michael, that's a powerful slide. Thank you for sharing. Thanks for all your data and all your analysis. Next, we're going to dive into sense of belonging. By this, we're referring to the feeling that you are accepted, included, and valued within a group or environment, in this case, your workplace of your brewery. It's the sense that I fit in here and these are my people. So let's dive in. We asked participants how much they agree with 3 different statements. I feel safer on my owner, managers, and coworkers, three separate statements. This slide shows a clear decline in how safe employees feel across the board, regardless of gender or who they're interacting with. What really stands out is that men are now reporting a sharper drop in safety, especially around owners and managers. For example, men feeling safe around owners dropped from 81% to 70%. This is a pretty significant 11-point dip. Women also saw a decline, but it was slightly smaller, going from 82 to 75%. When it comes to managers, the story's similar. Safety rating dropped by 11 points for men and 7 points for women. Even though coworkers remain the group people feel safest around, and more on their importance later, those numbers are also down, especially for men, dropping from 91 to 84%. These trends suggest that the workplace environment is feeling less psychologically safe, particularly in top-down relationships. If employees don't feel safe around leadership, that's a huge red flag for trust, retention, and overall workplace culture. It's a reminder that a true sense of belonging requires more than just fitting in. It requires feeling safe to be yourself, speak up, and know that leadership is behind you. So overall, what we're seeing here is a noticeable drop in trust in leadership. And this is more than just a little blip. It's a signal that psychological safety is starting to break down. We see that confirmed here. We asked participants to indicate which level they agree with the following statement. I can be myself at work. Psychological safety, feeling like you can be yourself at work, has been on a slow but steady decline since 2022. For men, it dropped from 90% to 85%. For women, from 92 to 87%. Those are still pretty solid numbers, but the trend here is what matters most. And if this continues, we risk creating environments where people hold back, disengage, or maybe even leave, not because of the work itself, but because they don't feel safe being themselves. Now, this slide shows one of the most concerning trends in the entire report. In 2022, the majority of employees felt that they could approach their manager about an issue without fear of retaliation or unfair treatment. 83% of men and 87% of women feel confident in doing so. Fast forward to 2025, present, and that number has plummeted to 66% for both groups. That's a near 20-point drop in 3 years. I repeat, a near 20-point drop in just 3 years. That shift speaks volumes. It tells us that more employees are holding back, staying silent instead of speaking up because they don't trust how their manager will respond. And when people don't feel safe raising concerns, issues go unresolved, frustration builds, and eventually people are going to leave. This is a clear contributor to employees potentially leaving once again, especially in roles where power dynamics are already fragile. If we want to retain great talent and foster a culture of honesty and growth, we have to rebuild that trust, starting with managers and how they handle feedback, conflict, and accountability. And that fear of retaliation doesn't just silence concerns. It can also stifle creativity. Because if someone doesn't feel safe bringing up a problem, they're probably not going to feel comfortable sharing new ideas either. Let's take a look at how employees are feeling about being heard and valued when they bring something new to the table. We're looking at here whether employees feel their ideas are truly valued by their colleagues. And again, we're seeing a slow but steady decline. In 2022, 80% of men and 82% of women said they felt their ideas were valued. Those numbers held steady through 2023 and 2024, but this year in 2025, they dropped to 77% for men and 78% for women. So while 3 and 4 still feel heard, the trend is slipping. This is one of those subtle cultural shifts that can build over time. When people start to feel like their contributions don't matter or they're being dismissed, it doesn't just affect morale, it affects innovation and collaboration too. Two aspects so important to our industry. Especially when paired with the previous slide, you start to see a pattern. Less trust in leadership, more fear of speaking up, and a growing sense that voices aren't being heard. If we want breweries to continue growing and adapting, we need to continue fostering an environment where people feel encouraged to contribute and know their input has weight. I feel motivated to do my best. That's what we're going to talk about now. This slide shows a subtle but also important shift in employee motivation, which I love to talk about. In 2025, over 80% of employees say they feel motivated to do their best at work. That means 1 in 5 doesn't. And that's significant. For men, motivation dropped from a peak of 83% in 2023 to 80% this year. For women, the decline is steep, from 89% in 2023 all the way down to 80% now. While 80% might not seem too much of a red flag on the surface, motivation is one of those early indicators. It's tied closely to engagement, performance, and retention. And when motivation drops, it often signals deeper issues like burnout, lack of recognition, or feeling disconnected from purpose. Combined with the last few slides, less safety, more fear of retaliation, and feeling less heard, it's clear that emotional investment in the workplace is starting to erode. We have to be better. Reigniting that motivation requires more than perks. It comes from building cultures of support, trust, and opportunity. And so far, we've looked at how employees are feeling about safety, trust, and motivation. But these feelings, they don't exist in a vacuum. They're often shaped by what support systems are in place. I'm now going to pass it back to Michael to talk about training and performance. Because if people aren't properly trained, supported, or developed, it becomes a lot harder to stay motivated and feel like you're set up for success.
It does. And I cannot stress the point Andrew made enough about how all of this is interconnected. If you are in a culture of trust, a culture of innovation where you know your ideas are going to be heard, valued, and seen, that just sets the tone for everything else. And that jumping off point is often training and performance when you are first starting your role. So right off the bat, we have job training. We asked respondents to agree or disagree with the statement, "I was properly trained for my role." And this is something that we see is volatile year over year. However, the trend overall, nearly half of employees do not feel they were properly trained for their role. For women, truly half of women were not properly trained for their role. And then approximately 1 in 3 men think that they were not properly trained for their role. And when you think about when you first join an organization, there's always some level of excitement when you have your first day of work or first new role. And if you start to maybe not feel so equipped to handle certain situations as they are popping up, you start to wonder, well, what should I do? And you maybe don't have somebody to ask about that particular task, which we're going to get to in a moment. It starts to impact that morale and cutting corners. And well, maybe we just do it this way because it's easiest, but it's actually negatively impacting the guest experience. It starts to develop this swirl among your own workforce. And up next, we have this statement: "I have someone at the brewery to ask questions about my role." Andrew, we could have an entire other session about the importance of mentorship and career development and advancement within, regardless of industry. When you have someone that you go to in your role for your questions that maybe you don't necessarily even want to ask your manager about, it really helps to have that ally in your corner. And this is another spot where we see a somewhat volatile report from men, but a steady decline from women from 2022 to 2025, 65% down to 57%. And removing the numbers and thinking about what that means, again, nearly half of employees at the brewery don't feel like they have someone that they can necessarily ask those questions to about their role. So this goes hand in hand with training, where we're seeing low numbers of actual mentorship or development, and people oftentimes just having to figure it out on their own. And while they might be able to figure it out on their own, while it might be a good enough, the lack of support is something that is ultimately going to impact that importance and the culture of trust that Andrew was talking about in the last segment. And getting to professional development and future growth and envisioning a future at the brewery, employees continue to lack meaningful professional development opportunities. This was something in 2022 when Andrew and I met looking at these numbers. We felt that the numbers in 2022 were low. Having meaningful professional development opportunities, whether that is going to conferences or state guild events or different certifications that the industry offers, we felt that 55% and 65% were low. And we see that number continue to decline, where now for men, less the majority, most people don't feel like they have a meaningful professional development opportunity, and women slowly approaching that as well. And when we start to think about future retention, of course, people are paying bills, but you are going to see the specialness of this industry where people truly do love the people in this industry. At some point, all of these metrics that we're talking about, there's a little bit of a writing on the wall that maybe this is not a viable long-term future for me. And this is a key element, which we're going to see a little bit later on, just the impact of having these opportunities to continue growing, continue learning in the industry that we all love. Next up here, we have thinking about overall enablement, thinking about resources. This could mean equipment. This could mean software. This could mean training. My brewery provides the necessary resources for me to perform my job well. 2 and 3 agree that their brewery enables them to perform their job well. However, again, you look around your tap room, 1 and 3 probably doesn't feel like this. So making sure that regardless of when you joined, maybe the folks that have been here for that sort of 2-year and above mark, which we saw at front of house particularly, it's a very small portion of the overall workforce. Maybe those people are the people who are saying, yes, like I do feel that my brewery provides the necessary resource for my job well. Making sure that, especially for the newer folks, the folks that don't have that institutional knowledge about how your brewery operates, making sure that you're lifting them up with trainings, with resources, and perhaps not just here's how we handle hospitality. Give them formal training on your point of sale. Thinking about so many times when we go to a brewery, if there's a new bartender, they're learning through action, which is great. And of course, you're always going to need that on-the-job training, but making sure that they have dedicated time before they are in front of the customer, before they are interfacing with your guests, giving them the tools to feel equipped in that moment. If there's not anybody else available in that moment to help them do their job well, making sure they have that dedicated training across their role. And now we've talked a lot about these metrics and how a lot of them are declining. Andrew's going to bring us home here in a truly riveting section about overall happiness.
Michael, I think in future years, it could be fun to have a panel about each of these headers that we've discussed so far today.
Absolutely.
And I'm excited to dive into overall happiness. So thanks again, Michael, for all your work on this. It's been a fun partnership. So far, we've seen that training, mentorship, and development opportunities are areas where many breweries are unfortunately falling short. And while those may seem like operational issues on the surface, they do have a real emotional impact. When people don't feel supported or set up for success, it affects how they feel about coming to work every day. That brings us to overall happiness. Let's take a step back and look at how all these factors are shaping the broader workplace experience. In this one, we asked participants how much they agree with the statement, "There is mutual respect between my coworkers and me." While the numbers are still relatively high, we've seen a clear decline. In 2022, both men and women reported 93% agreement. By 2025, that's dropped to 85% for men and 83% for women. That's about a 10-point drop over 3 years, which suggests that even peer-to-peer relationships are feeling the strain, likely impacted by broader cultural or operational stressors in the workplace. This one looks at the statement, "I am happy to work at my brewery." Let's see what the data says. This slide is surprisingly steady despite all the other drops we've seen. Overall happiness at work has been relatively stable. Men dropped slightly from 81% in 2022 to 23 in 2023 to 27 in 2023 to 78% in 2025. Women, after a slight decline, stayed at 81% this year. So even though many experience indicators are declining, like safety, trust, and support, employees do still report being generally happy at their breweries. That says a lot about the industry. But how long will it last before burnout kicks in? Here's where the differences by role really show up. Brewers, despite reporting some of the toughest workplace conditions, are actually getting happier year over year, climbing from 66% in 2022 to 74% this year. Meanwhile, front of house staff have dropped sharply from 94% to 77%, and business roles fell to just 72%. Earlier, Michael spoke to how owners increasingly feel they have take-home pay below fair pay compared to previous years. However, they do still appear quite happy to work at their brewery. With all this being said, the divide across roles is widening, and this reflects differences in pay, stability, and how people feel connected to the mission or even decision making. We all really need a why. And if we zoom out for a moment, this trend stands out even more. The 2024 World Happiness Report shows that the United States has dropped out of the top 20 happiest countries in the world, with sharp declines among younger workers, many of whom fill roles in hospitality and business functions. Now, I'd like to focus more on those in those front of the house roles. The sharp decline in happiness among taproom staff may reflect more than just internal brewery culture. It could also be a reflection of the broader environment they're operating in. Taproom workers are on the front lines dealing with the public every day. In a time of heightened political tension and cultural division, those interactions can be emotionally draining. As one bartender put in a 2024 Axos report on hospitality about burnout, it's like I'm not just pouring beers anymore. I'm managing people's emotions, and that's exhausting. Whether it's uncomfortable customer conversations, put back on policies, or just absorbing stress from guests, taproom staff are navigating a lot more than just pouring pints. And with younger workers often filling these roles, they may be feeling the weight of external issues like economic pressures or lack of systemic support more directly. So while breweries are somewhat surprisingly finding more joy in their work, others in the brewery are struggling. And that's a clear signal that different roles need different kinds of support.
Andrew, if I may, real quick on that last slide, I just feel moved to chime in. When we look at those numbers of how brewers, there's been a steady increase, and front of house and business, we see that steady decline. We look at 2022, brewers are by far the lowest group in overall happiness. So another way to read that would also be everybody is now at that level of the brewers, because we hear a lot, even particularly in CBP threads, about how brewing operations, it's very tough, it's low pay for the work you're doing. A lot of other people are now at that level, just to plus one to your point here.
Yeah, that's a great analysis, Michael. Thanks for jumping in with that. This next slide looks at the statement, I have a positive perception of my brewery's ownership. This is one of the more dramatic drops we've seen in the data. Back in 2022, 69% of men and 76% of women said they had a positive perception of their brewery's ownership. Fast forward to 2025 currently, and those numbers have fallen to 54% for men and 61% for women. That's a 15 to 22 point drop in just 3 years, showing a steady erosion of trust and confidence in leadership. Wow. When employees lose faith in ownership, it just doesn't affect morale. It affects transparency, communication, and how invested people feel in the long-term success of the business. It's a clear signal that the brewery owners may need to rethink how they're showing up, listening, and leading in today's workplace. And if trust and ownership is slipping, it's not the only place it's happening. We're also seeing similar declines when it comes to how employees view the direct managers. Let's take a look at what the data says about that relationship. And this slide echoes what we just saw with ownership. The statement, I have a positive perception of my direct manager / supervisor. There's a steep decline in how employees view their direct managers. For men, positive perceptions of their manager dropped from 73% in 2022 to just 55% this year. For women, the drop is even more striking, from 84% down to 54% in the same period. That's a 25 to 30 point decline in just 3 years. These are the people employees must work most closely with. So when trust in managers breaks down, it affects everything: communication, accountability, team morale, and even retention. We've all heard the statement, people don't leave jobs, they leave managers. First used in a 2025 Gallup study, it's still true today. Even if pay and perks are competitive, if someone doesn't feel supported or respected by their direct supervisor, they're unlikely to stick around. It's clear that leadership development at the manager level needs to be a priority. These numbers show employees aren't just frustrated with ownership, they're feeling disconnected from their day-to-day leadership. Earlier, we talked about the declining trust in managers. One of the most overlooked reasons for that breakdown is tenure. In roles like front of house and business, where happiness and trust are lowest, we're also seeing the shortest tenure. That constant churn makes it difficult for managers to lead effectively and for employees to ever feel truly supported. On the flip side, in brewing ops, where employees tend to stick around longer, we're actually seeing happiness increase. That tells us time, consistency, and trust do matter. If we want to improve the employee experience, we need to stabilize teams, improve onboarding, and help managers build meaningful relationships before people walk out the door. And there's another factor worth considering: manager experience. Many managers in our industry are promoted because they're great at their jobs, not necessarily because they've been trained to lead people. Especially in high turnover roles like front of house and business, many supervisors may even be new to the brewery or new to management altogether. That lack of experience, paired with minimal training and constant team turnover, makes it tough to build trust, give consistent feedback, or support staff effectively. And that might help explain why perceptions of managers has taken such a strong hit. But despite the challenges we've seen across most experience indicators, employees still feel positively about how their brewery is viewed from the outside. For men, perception of their brewery's reputation actually improved, starting at 80% in 2022 and rising to 87% in 2025. For women, the trend peaked at 89% in 2023, but has since declined to 81%. It's interesting to see this contrast: how employees feel their brewery is perceived externally versus how they feel internally as part of the operation. That disconnect is important to look at, because ultimately, if employees aren't happy working at the business, it could start to show. It may affect service, team energy, and eventually the guest experience. The good news is that a strong external reputation gives us something to build on. But to protect that reputation, we have to make sure the internal culture is just as strong. Even with all the declines we've seen across safety, support, compensation, and trust, this slide does offer somewhat of a hopeful takeaway. A large majority of employees still say they want to continue learning and growing with their brewery. For men, that number has remained fairly steady, landing at 81% in 2025. For women, it's slightly higher at 85%. While both have dipped a bit from previous years, they do remain strong overall. This tells us that people are not just here for a paycheck. They still see potential in the workplace. They want to grow with the company, and they believe in what the brewery could become. A big part of that commitment often comes from the people they work alongside. Coworkers play a major role in how connected and supported someone feels at work. When those relationships are strong, they become a reason to stay and invest more of themselves. That kind of loyalty is something breweries should truly take seriously, but it should not be taken for granted. If we ignore the areas where employees are telling us they are struggling, things like leadership, training, psychological safety, that loyalty will fade. With the right investment in people, support systems, and everyday leadership, that loyalty can turn into long-term engagement and a stronger, more resilient team. The next two slides are always two of my favorites to monitor. When we look at what's currently, I repeat, currently making employees happy, the message is clear. It's the people and the sense of community that matter most. In 2025, 72% of respondents said their coworkers are contributing to their happiness, followed closely by a welcoming environment at 66%. These two factors have consistently ranked at the top over the past 4 years. Things like compensation, benefits, and discounts have all declined in influence. For example, base wages and salary have dropped from 58% in 2022 to just 46% this year, and taproom discounts have slipped to 39%. What's even more telling is how little weight is being placed on things like growth, appreciation, and educational opportunities, which Michael talked to earlier, which continue to trend downward. These are areas where employees are saying they want more and where breweries do have room to improve. Just like we strive to give our guests a customized experience, it's also important owners and managers do the same for their staff, taking the time to understand people's needs and expectations. People want to feel part of something. They want meaningful relationships and to be part of a positive, collaborative environment, which overlook taproom discounts as the fourth most important factor in. If that's in place, it can carry a lot of weight, even when other aspects fall short. But if that connection fades, the rest of the experience becomes harder to sustain. In contrast to the last slide, which focused on the emotional and cultural factors driving happiness today, this slide shows us what employees say will matter most to their happiness in the future. These are the things that will keep your team around. At the top of the list is base pay raises, selected by 75% of respondents in 2025. While slightly down from previous years, it's still the clearest priority. Growth opportunities come in second, holding at 62%. It's clear that employees are looking ahead and asking, what's next for me here? We also see increased benefits, performance incentives as strong drivers, rounded in a clear message. Employees want to be recognized, rewarded, and given a path forward. Interestingly, relationships, while still important, rank lower here. That includes coworkers, owners, and even things like appreciation events. And taproom discounts have dropped to just 11%. The takeaway is simple. People still care deeply about culture and community. But when they think about the future, they want stability, opportunity, and financial growth. If breweries want to retain great people, they'll need to invest not just in the now, but in what comes next. And at this point in time, we truly appreciate you for tuning in, for this being important to you, for participating in the survey, which we do every year. I'm thankful for this partnership with Michael and Craft Beer Advisory Services. And if you're interested in downloading the study, there's the link below. You can also find it on craftbeerprofessionals.org. And Michael, is there anything you'd like to add?
Such a pleasure to continue working on this important body of work with you, Andrew. And I think Andrew covered it really nicely on that last slide. There are some warning signs this year. We are seeing some declines and a lot of metrics. And the point that I will just emphasize and elevate that Andrew said on that last slide is invest in the now to guarantee your future.
I love it. Well, Michael, thank you again for this partnership. Everybody else, we appreciate you. I hope to share a pint soon. See you later. Cheers.
Cheers.